Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Pål and Ville. This is Fintech Daydreaming.
Hello and welcome back to Fintech Daydreaming. My name is Ville and I will be your host for today's episode, which is going to go to all the usual topics we always talk about, which is invisible banking, embedded finance, cashlessness, and what is the impact of that into the society where we live in today. But before we get all to the good stuff, of course, I have to say hello to my co-pilot, co-host, and good friend, Pål. So how are you today, Pål?
I'm good, and I can see that, as usual, you are not at home, you're out traveling and experiencing the world. And for once, I'm actually excited to say that as soon as we finish recording this, I am heading to the airport to fly to Germany. I've got a customer in Germany that would like to have some of my face-to-face time, which is always exciting and nice. But I'm even more excited to be sharing that, we have been on and off working repeatedly with Fintech Farm here in Helsinki, which is, one of the big fintech hubs for the Nordics. And we have decided with them to cement this into a more formalized partnership. And the next episode that we will be doing of Fintech Daydreaming will actually be the start of a whole new thread of repeated episodes that we will be doing with them based upon a newsletter that they send out every month called the Nordic Fintech Insights. So that will be an exciting new adventure for us and a closer collaboration with Fintech Farm. So I'm really looking forward to that.
Indeed. We did promise some new things in the beginning of this season, and this is one of those things, which is definitely changing the usual structure of this of our podcasting for sure. And it's always good to talk about fintech news and what's the latest and greatest in the world. And let's see, for all we know, we might be actually recording that in person in the same room, so to say. So I think that's also a fun change in pace.
Yeah, technology permitting, obviously.
Yes,
we're so used to doing all of this virtually, suddenly putting everybody in one room, we might have a catastrophic technology failure, but we'll give it a go, right?
No, I mean, those catastrophic failures are the kind of the spice of the podcast, right? So everybody's looking forward to those always.
Yeah.
But good. That's great news. I'm really looking forward to that in the next episode. But before we get there, we of course need to and get to talk to our guest today. Before we introduce the guest, I want to mention a little bit what is the context of the conversation today. A lot of the hype around the industry seems to be, in the fintech industry, always seems to be revolving around cashlessness, basically moving away from the physical cash into the digital world, basically making everything less tangible, so to say. And this phenomenon is always touted as a very positive thing. There are, of course, very tangible positive things coming out of this, including the ability to prevent certain types of crime related to cash. There's the environmental impact of not using physical cash because you don't have to move physical things around the world and you can just move everything electronically. All of these things are very well known, and that's why we all are very much pro cashlessness. But sometimes the other side of this conversation is forgotten as things get less tangible, and when people lose maybe sight the physical feeling of actually having money in your hands, the question becomes: are the lines becoming too blurred? Is it becoming too difficult to track your spending? Is this actually a problem in terms of financial inclusion, because we have a lot of people that don't know how to use these digital tools properly? All of this and more is going to be discussed today by us and our guest, Marcus Ivarsson. So, Marcus, how are you today?
I'm good, thank you. Nice to be here.
Yeah, good to have you again. I hope I was framing the conversation correctly in terms of what we're going to be talking about. But why don't you start by introducing yourself? So, what do you do? Where do you come from? And where are you going?
Yes. I'm not sure, but I might be the first guest that you have that does not have a background in the financial industry. Maybe that's not true, but that's true for me at least. For the last 3 years, I've been building a startup called Tjing that is trying to tackle the problem of including the kids into this digital experience that you're talking about. My background is I'm a creative director, designer. I come from sort of product design in the digital space mostly, and communication, branding, and so on. And a couple of years ago, I have 4 kids, and I have struggled over the years handling money and making them both interested and careful about their spending and economy, because everything has been so abstract. I mean, in Sweden, cash has been phased out since at least 10 years back. You know, now it's almost impossible to use cash. When I was a kid, I always got weekly allowance, and I worked a little bit at home, and I got compensation, and that's been extremely tricky to deal with over the years. And there hasn't been an amazing amount of solutions. There are a few, but most of them are directed towards parents to solve their problem, and not necessarily to engage the kids in this so important space. I mean, the kids of today, the generation Alpha, I think you're talking about, after 2010, right? They are the most digital generation ever, and yet they're not included in the economy until they're maybe 10, 12 years old. And at that point, they get a card, and they can see a number that reflects their economic energy, let's say, right? Their economic capacity, or their financial capacity. And that's very abstract, you know, being sort of thrown into that reality. All of a sudden you have a card, you can run around, you can just wave with it, and back you get stuff, right? And we all, I mean, research clearly shows that you get the kick of serotonin, and, you know, and dopamine as well, I think, every time you spend. So I came from a situation where these 4 kids were off the rails. You know, I couldn't make them safe. That was pretty much the case. So we decided 3 years ago, together with 2 old colleagues, to take all our knowledge within design. We've designed games, all sorts of immersive experiences, and we said, what if we do money? What if we design digital money in a way that makes sense for the kids, that makes them feel valuable, just like coins and banknotes does, right? So that's been the project. You know, we've had our own kids as testing. I wouldn't say animals, but they are. But we've been trying the app out, you know, on our own families, and it's been super fun, super fun.
It's actually interesting. I want to reflect on everything you said. I've got fairly similar experiences. Unlike Ville, who doesn't have any children, I've got children as well, and they're, you know, early teenage years at the moment, and just like your children, they've grown up in a cashless society, a cashless world. An awful lot of it has been, you know, they've not really interacted with cash. Now, I grew up in the UK, and the UK at the moment still is, I won't say it's as cash focused as Germany, but they're a little bit behind us here in the Nordics when it comes to the whole cashless society part. And I took them to the UK to visit family for the summer holidays this year. And I decided that it was easier to basically take out cash to give them as spending money whilst we're in the UK. So I took out, you know, a good amount of cash in UK pounds, and gave them both the money and said, you know, here's your spending money for the time that we're in the UK. And it was fantastic to see them interact and relate to cash, because it was the first time really that they'd, in anger, you know, carried cash, looked at the cash for spending, seen how much change they get back, analyze how much money they've got, because they were so used to doing that in a digital way, doing it on a phone. You know, you can get apps for your kids with your banks and everything else. And it was almost a confusing scenario for them, but I think it was a very good experience as well. So I can relate very heavily to what you're saying.
Yeah, what I think is interesting is that they grow up in these very, very rich digital worlds, and I would say in 99 cases out of 100, you know, the bank app is probably the most boring touch point on their smartphone. You know, I mean, honestly, that's true. You know, maybe the calendar is more boring. I'm not sure, but so it's very interesting that they're coming from rich worlds, high levels of immersion and stuff, and then they come to what's perhaps most important for a modern human, which is your monetary situation, and it's dead boring, basically. And I think that's, you know, and at the same time, we're moving. They are coming out at the age of 18 as adults into a world that is highly complex. You know, you can do investments in all sorts of assets, as we know, with a click of a button, right? So it's very easy to get lost in that space. And have you not then shaped any form of intuition around small things like you were saying, like how does these numbers work? Like in 1,000 there are 10 hundreds, for example. In 100 there are 10 tens, and in a 10 there's 10 ones, and in 1,000 there's 1,000 ones. You know, all that sort of exchanging game that we were dealing with as kids, we had to use our heads to sort of figure things out. I think that provides some level of intuition that is just lost today, because you're just fed with one number, and you see post fact or, you know, post purchase, you see that something happened to that number. Sometimes it's hard to see that anything happened at all. And I think that's true for adults as well. I've talked to a lot of people over the last years that do not feel in control anymore of their economy, you know, because they're spending way more than they should. They buy before they pay, and all those sort of things make them a bit, you know, the financial well-being is not necessarily super high. Control is important. So that's what we try to sort of reverse. We want them to see their money, we want them to control their money. And that's true for other assets as well. We're now exploring how can we introduce stocks in the same way? How can we introduce cryptocurrency and let the parent be the one who is sort of feeding the kids with this reality that is highly complex, but that you can make very concrete by design.
That's actually interesting, and I want to get to the conversation of what are the kind of different ways that different institutions are trying to tackle this problem, which seems to be gaining more attention lately. But before we get to all of that, let's focus on Tjing. So the company that you have founded and you're running, spelled Tjing, I think. So, but pronounced Tjing, I heard. Yeah. So the practical question that I have, and I'm sure that the audience would like to hear as well. So how does it work? What's the user experience when you use it? And then, well, what are the kind of mechanics behind it that you're trying to introduce to solve these problems that we outlined now in the beginning?
Yes, it's actually very basic. It's a digital wallet. The kid have one on their device, the parent has one on there, and you send tokens from one device to the other. So it's pretty much digitizing cash in a way. So you send a coin, a 50 coin, let's say, and it goes from one phone to the other. And it's the same coin, it's the same token, same serial number. So it's a very easy way and a very sort of concrete way of sending value between two devices, let's say. The essence from the beginning was, do kids change their behavior when they see their money? You know, and we developed a very early prototype a couple of years ago where we had very ugly coins that they could combine into bigger coins. So they understood that, you know, they could feel them out, they could, you know, touch them on the screen. And we saw an immediate change that happened in the way they looked at their money. All of a sudden, they started to think twice before they spent, for example. In one situation, I had one of my kids, he wanted to buy Robux for 900 Swedish kronor, so that's 90 euros. That's a lot of money, I think, for Robux that you spend, you know, you waste them very sort of frivolously. And that was just when we had launched the app. So I had not had a chance to create a new wallet for him on Tjing. So I did that really quickly instead of getting angry, because that's sort of, you know, what a parent normally can get. I sent him over because he had 960 kroners or something like that. So I sent over one big 900. That's a beautiful pink coin, and a 60. And I gave it to him and I said, okay, then you have to Tjing me those 900, no problem at all. And he looked at his money and he felt them out and he started to exchange them, because you have small exchange slips, so you can turn them into a 400 and 500, and you can keep doing that. So he sat like that for 3-4 minutes, and then it's like, ooh, 900 is quite a lot actually. I think maybe 50 is better. And he came to that conclusion all by himself. And we've seen that pretty much every kid, every parent that we talk to, the kids all of a sudden they grasp that the money has some sort of quality. It has a value, and you have to leave them. You have to get rid of them, which is an act of friction, emotional friction. And research show that that's true for us as well. We spend more with card than with cash, for example. If we bring 500 kroner to the pub, we normally don't spend more than that, because then we have to make a loan and stuff. But if we bring the card, we just keep buying beers. So it's very basic. So Tjing is very basic in that sense. It's really just seeing your value, and now right now it's coins mostly, but also small messages that you can send to say thank you, because that's another aspect that's gone lost as well. It's very abstract. In Sweden we have Swish, for example. You swish money to each other digitally, and even if for young kids that they can't use that really, but for a bit older kids they do that. But it's also very one way, one directional. So you swish and you forget to say thank you, for example. So we've also added those sort of emojis and mechanisms that makes it fun for grandmother to send money, let's say, for a sports holiday, and get some love back, get the thank you. But we're also looking at other types of tokens that we can introduce, because we could have stocks, for example. As I said, we could have crypto, we could have all sorts of stuff that's relevant for the kid. But right now it's very simple. It's just coins flowing between parents and kid, or between siblings, or between grandmother and grandchild, for example.
I think that's your idea of expansion there, I think, is quite relevant and critical. I think you and I had a discussion before we recorded this episode, where we've talked about financial literacy and the changing forces of finance since you and I were children, and the fact that the old premise of get a degree, get a job, work hard, save your money, and your future will be safe is completely gone. And therefore, associated with that, it's important to teach your children that you get money in, you need to save it. But there's so many other things that are now impacting that they need to think about. They need to invest themselves for their future. They do need to think about taxes. They do need to think about what other asset values do I need to have in my portfolio, because at the end of the day, the government's not going to look after them anymore. They're not going to have by default a pension. They need to really think of the future, unlike to a certain degree we did when we were children. And having your app expanding into how do I do investments, how do I look at other asset classes, how do I, maybe even how does taxation impact the money you get and the money you spend. I think that's a critical part of the learning process.
Totally agree with you, and I think that's a really relevant thing that you're mentioning there, because handling money handling money in Tjing is very simple. If you want to do budgeting, for example, or if you want to put some money to taxation, you basically move the money interactively into different positions, right? So we could develop wallets, for example, that teach you just that. Same thing when it comes to stocks, for example. How do you manifest the idea of having a piece of a company? That's pretty easy if you use tokens, actually. It's very easy for us to say to the kids, hey, do you want to buy a share in a company? And they're asking, what is a share? It's a piece of that company. What company would you like to own a piece from? And then we send over a little stock in Tjing. That's not released yet, but that's what we do basically. And they can follow, they can see what they bought it for, and they can see what it's worth right now. It's a very simple way to understand the mechanisms, because at the end of the day, it's not that hard. I mean, I find it coming from the outside a little bit like a financial analphabet, you say. I've always been a bit, scared of all the concepts that are surrounding this space. It's tricky. It's esoteric, But actually now when I dig into it, it's not that complicated. It's pretty simple. And I think if you can introduce this early to kids, they build an intuition very, very early in life, and they lower the threshold to approach those financial ideas. So the project is about financial inclusion, first of all, and also financial literacy. I mean, that's what we sort of want to get to. And to do that, you have to make it fun, because otherwise kids don't care. That is the essence.
We can certainly hear the fun part, and the fact that you're making this money very tangible and making people physically almost move these coins to different places to actually spend money. But I know that our audience is, we have a lot of bankers and fintech nerds in our audience, and they're dying to hear Are these real transactions? Is there real money involved? If not now, is there going to be in the future? I mean, is this somehow connected to the actual payment and the actual monetary value that people have? Or how does it work in terms of value? Is it completely self-contained, or how do you do it?
No, but I mean, it is, the answer is, it's a philosophical question. I mean, I say it is money, you know, because the bank is myself. So what they have in their purses is, I'm the, what do you say? I'm the one who's granting that they'll be able to get something for it. But it's not connected to a bank today. That's what we're looking at right now. We just entered a partnership with the MasterCard, their Lighthouse program, which we were really, really happy about, because we want to enable the kids to move outside of Tjing. Right now, they have to send me money and then I pay, for example. So they're Tjinging me money and then they ask me to pay for something. And that's how it works, basically. Enabling them to go to the store themselves. I have this story as well. My 8-year-old son, this summer, he was handed a 20 kroner bill from his grandfather. And that's very rare, actually. So he was super happy, you know. And he's good with money now. He's had Tjing for 2-3 years. He's a really good saver. You know, he really understands sort of the concept of money. So he was walking back and forth to the counter in one of the small shops in town. You know, he wanted to buy a piece of chocolate. You know, and I said, you can buy whatever you want. It's your money. And then, you know, after looking at me a couple of times, looking at the guy behind the counter, he walks up there and he takes this chocolate bar. You know, he puts it at the counter. And he hands him the note. And I just see him from a distance, like shaking his head. You know, they didn't accept cash, obviously. You know, so Måns is putting back the chocolate bar and he comes back with a really sad face, you know. And that is something we really want to solve. He's 8 years old. He's 9 now, actually. He was 8 in the summer. He needs to be able to go to a store and make a small purchase, you know. So our next step is definitely to connect this into sort of the real money, quote unquote, space, right? But I mean, on one level, I'm granting that this is money, just like the bank grants me that, you know, my bank account holds money. So we're talking about this as real money because I would say it is, you know, for sure.
Yeah.
So instantly, when you say this is somehow connected to real money, and then that whole notion of the kid can pay with it at the shop, my brain goes regulations, KYC, AML, everything else that goes around that. So. Right. Is there, you know, an element of regulatory or financial licensings associated with this?
Absolutely. I mean, for sure. You know, and I think the beautiful part with where the app is today is that the parent is the bank, so the regulation is not there, right? You can really deal with stocks and everything because the parent is sort of creating these stocks. You know, they create gold and so on. So the system right now is very flexible. But of course, as soon as the component comes in, where you have a bank connection, there is regulation happening. And what you realize, of course, coming from the outside, is that it's a fairly steep. They've not made it easy, let's say, you know, to get into the space. I mean, who are they? But I mean, it's hard. I understand that it's a regulated space, right? So we're looking at different models here. We're trying to find our sort of position in the financial ecosystem, really, because we're not here to compete really with anyone. We're just here to provide a solution for the young people. That makes sense to them and that shapes their intuition around money. So we're looking at open banking, for example, as one potential. And there are a lot of players out there, as you both know, that can help us there. You know, there are card as a service is another interesting idea. Collaborations with banks, we're absolutely open for that as well. We just want to distribute this to as many families as possible. You know, that as many kids as possible can get into this. You know, it's important to shape their future. So and of course we could also long-term look at the e-money license and, you know, eventually become a bank. I mean, that's very, very far into the future, I would say. Right now, I think there are much smarter way for us to get out there, because again, we are looking at this as an impact project. Of course, it's commercial, but we really want to get to as many kids as possible. We think that this is going to happen. This transition from cash to digital, I think it's inevitable. That's going to happen across the world. I mean, we're already seeing it in many parts, right? But but surely you're absolutely right. There is a lot of regulation and stuff, and we have a couple of different ways that we're looking at how to not get around that, but to simplify and to make the threshold as small as possible.
I think there's a lot of interesting opportunities here, because as we know, the world, especially here in Europe, is moving towards open banking through different kinds of regulation and new directives coming through. Not getting into all of those in this episode today, but I would imagine that there is a future where connecting these types of new user interfaces into existing accounts, yours as a parent, and then your children's accounts, and then moving money between them, and then allowing the children also to spend money from those smaller pools of actual monetary value would be a possible future for sure. But looking at the landscape today, I see a lot of especially user interface related problems on those things. Now, you basically outlined your current situation where you have this the parents as the central bank issuing the coins, and then you're able to move them around, and the potential future of moving into different kinds of licensed businesses. But what is your current business model with the kind of information that you have right now, and is that changing now in the future based on what you just said?
Yeah, no, I mean, the current way we're looking at it, the app in its current state is a tool for families that don't want to, or that cannot get banked for their youngest kids. We have kids as young as 2 years old, actually. That's our youngest user. Most of them right now are like 5, 6, 7, 8, 9, maybe, you know. And then when they're coming into 10, 11, 12, they need real money. So that's where sort of we might lose them if we don't have any sort of connection to a bank. But that's where we're looking at that as well. But right now the business model is, right now Tjing is free. It's very early. You can download it and you can have fun with it. But we're introducing new type of wallets, new type of tools, as I was mentioning, like stocks, funds, all sorts of sort of educational materials that we are going to have to pay a premium for, or charge a premium for. So that's going to be Tjing Plus, basically. We want every kid to be able to join and to handle the basics. I think that, again, that's just a question of impact, really. So there's always going to be a version that is fun. But there are degrees of fun and there are degrees of learning, and we think that families are prepared to pay a premium to serve their kids with the best experience possible, because this is it's such an important aspect of life. At the end of the day, setting your kids up for success is important for every family out there.
So sorry, I didn't mean to interrupt you there.
No, go ahead. No, that's the first step. That's the first step.
I was just going to say, putting my investor hat on then. I mean, I can hear you saying that you're looking at moving towards a freemium style model where you get the basics for free and you pay something to get additional value. But what's your revenue model at the moment? If the app is free and all you're giving at the moment is the basics, where are you getting your revenue from today?
We are basically investing ourselves, our own. I mean, we've been taking in. We had a round of financing about 2 years ago, where that allowed us to build the whole platform, and now we are looking for the next step, basically. So at the very moment, we're just giving this for free to everyone, and we're backing it ourselves, basically, until we find either a collaboration with a bank partner, or we find an investor that is interested in backing the venture, basically. So, and we're using the autumn now to really figure out sort of, we've just stabilized. Let's say we have a platform now. We have about 3,000 users. It looks really good. The retention is very high, and we get really good reviews. People are very happy about it. But we're also careful right now not to grow too big before we sort of know what our position is in this financial ecosystem again. So I think this is really an exploratory phase for us. And I think that's what the autumn is going to be all about. How do we get to as many kids as possible? That's our question. And of course, how can we sustain this from a financial perspective long term? But right now that's the model, basically.
So we have listeners all around the planet, we've learned, which is a bit surprising, but we're happy about it. And I'm sure they're thinking, is this a global application? Can I download this anywhere? And if it's not, will it be global in the future?
Yeah, it's absolutely the idea to make this global. We right now exist in a couple of countries. We just released it in Germany, Spain, Italy, France, Holland, I think. Yeah, exactly. So a couple of European countries there as well. We're quite careful, I mean, it's growing. It requires money as well, right? So we have it there more to to seed it to friends out there that can try it out and that can experiment and see how it fits into their situation in that society. I mean, we know, for example, that Germany is much more cash heavy than Sweden, you know, but and how does that affect the usage of the app, right? So, so Sweden, of course, Finland, Switzerland. It's also 3 countries where we've been, but we've been mostly active in Sweden actually, because that's where we are located right now, and that's where we've been trying it out. But it's been very much of a design. It is a design project. The whole thing is an innovation project in the sense that we don't know. Nobody has done this before, this exact thing. So we don't know exactly where this will take off. The only thing we know is that we're extremely committed to get this to as many kids as possible, because we see that it has a massive impact on the kids that use it so far.
So you must be having competition from other relevant apps in sort of the same space. What do you see as being your specific, unique value proposition? I mean, I believe there's a similar app in Sweden as well called Gimme, or something similar.
Yeah, Gimme they were very early. I mean, they were probably at least 5 years earlier than we were. And I used Gimme myself. You know, I was really happy that they saw the problem and that they did something about it. The problem we had with Gimme was that the kids didn't really care about it. You know, it didn't really serve it didn't make their hearts tick, you know. So we found ourselves not to keep using it, basically. You know, I thought it was a good tool, but they didn't care. So all of a sudden we realized we hadn't looked at it for like 2 years, actually, you know. And I put some level of interest that was ridiculously high. So they had money that was just taking off to the skies, basically. So that was actually why we started Tjing, because we said we are coming from the let's call it the rich entertainment digital industry with games, and so we know how to create stuff that people care about, that kids like and love. We are good at design, we're good at 3D, we're good at telling stories, and I realized that that's going to be quite hard, I think, for a bank to assemble a very, very good creative team, because most creative teams don't want to be in banks. That's actually just the reality, unfortunately. The best creative people on earth, they want to be on agencies, they want to win the awards and do really cool projects. And that's sort of the space we're coming from, the whole team. So I think that's our superpower, basically. We're coming from a different angle at this, you know. But I think, as you said, like competition-wise, I think there are definitely apps out there like GoHenry and Osper, I think it's another one. Gimme, as you mentioned yourself. So there are apps there, but I think that the problem there is that they're very similar to what the banks offer. You know, it's a very typical UX centric thing. You know, it's very focused on parents normally, and the education comes in the form of written text. Like, you know, today we're going to learn how to budget, and you have to read, and you have to, you know, we're trying to integrate the learning inside of the wallet, so that the wallet is teaching you by being just fun. You know, you get a stock. You don't learn about stocks. You just get a share from your parent, and you manage it and you look at it, and that's the way into this space, right? So we talk about experiential learning. We obviously didn't coin that term, but that's exactly what Tjing is all about. You experience your economy, you experience your finances, and that's the way you learn. And that's where I think we're actually quite different. That's where I think I hope we get competition, because I would love if more people did something for the kids, but I doubt it, because there are so many other interesting areas you can spend your creativity at, you know, like normal games that you can make quite a lot of money from as well. So we're fighting, you know, with our creativity to get into a space that not necessarily embrace new competitors or, you know, new solutions. So I really hope we'll find a position here, and that the financial ecosystem sees the opportunity to collaborate and give the kids something unique.
So let's broaden the conversation a little bit. So I think we're now quite well covered on what Tjing does and where you're heading, but let's get to more of the broader societal points, maybe of this conversation. So we talked a lot about financial literacy already, and why it's important for the kids. And the second part of that conversation, of course, is the digital literacy, because again, it's teaching about money, teaching about the value of money through this tool, but also digital literacy. Is there something you can talk about the dynamic between these two things? Are they connected? Are they completely disconnected? Do they benefit from each other somehow?
I mean, our kids of today grow up with an iPad. They basically they use their iPad. Same, you can see that in every restaurant. There's a family sitting and they have a 2-year-old, and they're trying to get the attention from the iPad so they don't scream and disturb the dinner, let's say. So I think every kid today, I think it's fair to say that across the world, I think kids are exposed very early, and the digital literacy is not. It depends on what you mean, of course, but I think their exposure to digital is they get more than enough. I think these kids, and I think it's inevitable that we will move into this reality. I don't believe that cash. I personally don't believe that physical cash is going to be around for that long, because it doesn't make sense, really. I don't think it makes sense. Maybe from some sort of war perspective or crisis time perspective, but with CBDC, I think that's also going to be phased out. So digital literacy is so natural for the kids. They grow up in a very complex reality, full of fraud and full of different ways of wasting your money. Everybody wants your money out there, basically. So I think it's more a matter of anchoring the economic, the financial aspect into that reality, because they get exposed very early to different types of currencies like Robux and V-Bucks and so on. And they don't really feel anything. I heard there's so many kids that are wishing for their birthday Robux instead of Swedish krona, for example, which is really interesting because that's their reality. They buy digital garments, and hats and all sorts of stuff. And that's also something that is almost stigmatized from a parent perspective, but we just have to get used to it, So you could almost see it, I think, that they are extremely digitally literate, right? And that's where we have to get this component in early on so that it sort of works in tandem, let's say,
I think there's an extension on that dimension of digital literacy, which I'm witnessing with my children again, and that is I would almost say a lack of fear. So when I look at my children using digital devices, they almost disregard the fact that there are evil actors out there. There are chances of things going wrong, moving money around. How do I know that it gets to the right place, etc.? A certain element that I feel that maybe us older generation have even though we are fairly digitally literate, we have skepticism over that digital world and that digital capability, which our children don't have, because they've almost been indoctrinated with, like you said, from day one. They've had an iPad and they take it for granted. They don't have any fear over that. So is there an element here of the digital literacy actually having a negative impact on financial literacy from the point of view of having a skepticism of, if I say I'm going to transfer 5,000 euros over somewhere, that I'm doing the right things and I don't take a fairly liberal, it will all be okay attitude to it all?
No, I think you're right. I mean, you hear those cases where kids are spending. I had a friend whose kid spent several thousand kroners on V-Bucks, for example. By the click of a button, and that became a problem, of course. From a family perspective. But at the same time, who is there to blame? I'm not saying the parents are to blame, but the society in general has not taught these kids or giving them any sort of opportunity to understand how to handle this new sort of situation. So they are fearless, as you say. There's just an element of they don't get to experience enough of that reality to make good decisions. I think they are sort of on a surface level until they themselves can control the situation. I wouldn't mind, for example, if parents could give V-Bucks in a weekly allowance to kids, and they could see their V-Bucks, and they can understand that V-Bucks can be transformed into Swedish krona and so on. Because I think that would change the way they think about spending V-Bucks, right? But if it's just a button, and there are buttons everywhere. If you see your senior games, your kids play Roblox, for example, many of those games that are there on that open platform, they have hit areas everywhere that makes it very likely for the kid to hit something that leads to a payment, basically, right? So they're trying to scam. A lot of these games, not all of them, but are trying to scam the kids at every click of a button, basically. But if the kids themselves could feel that, I'm handling this money myself, I know how it feels when I leave it, when I depart from it, right? Then I think we have a much better chance of creating solid individuals that can navigate this space.
Reflecting a little bit on the conversation here, I think it's an interesting observation that the children, the current young generations are so digitally included already that they get exposed to the monetization mechanisms of these gaming environments and virtual worlds at a very early age, way before they get exposed to actual banking system, because the whole banking system is and getting a bank account, all of those things are made to be, let's say, you need to grow up a little bit before you get to that world, because the regulation, of course, is limiting in many cases this inclusion at a very early age. But when they do get there, they've probably been transacting in these gaming environments for a very long time, so they get a very kind of a, well, they go in green and they get a crash course into this into this whole thing even before they get access to real money. So that's an interesting observation.
Yes and no. I see a like you mentioned. I mean, my son is an avid computer game freak and plays an awful lot. One of the issues I've seen with him is, and again related back to real world examples, one, the values in a lot of these games are ridiculously high. We're talking millions rather than ones and tens, which means that they get an inflated perspective on, you know, I've got 3 million. Yeah, well, most people in this world will never have 3 million euros ever in their bank account, and you've got 3 millions and you earned those 3 millions over 3 days. So they get a warped perspective on value, so that they go out of their gaming world where we're talking millions and they can earn that in days, versus reality where they have to work for 4 weeks to get hundreds. And I think there's a horrible disconnect there where, you know, apps like Tjing, like you've got, hopefully will help to balance that out a little bit, so they understand that the world is not, for most people, in millions and billions. It's in hundreds and thousands.
I totally agree. And I remember this was probably 6 or 7 years ago. They played a game and they came home and they were like, they wanted me to pay for Robux because their friend Dean had gazillions or something like that, you know, quintillions, I think. And I was like, quintillion? Where the hell did you learn that concept, you know, a quintillion? So I completely hear what you're saying. And I think, you know, if you would take a small kid and you would leave them at a big shopping mall, like, or a big toy store, you know, and they roamed around, you would realize that you would have to sort of teach that kid about what's okay to do, you know, how to relate to sort of different pricings and stuff. But we don't realize that the kids are at that sort of shopping mall all the time when they're in their digital realities. They are, because it's easy to think that they are not exposed to the financial reality until they're in the store where they buy groceries, right? Well, that's not true for most kids. They're highly exposed from the age of 2-3 years old. They play Toca Boca games and you can buy stuff in Toca Boca World, right? So they are exposed to financial reality very early, but they have no way to interact with it themselves. So they just ask their parent, and the parent do something, and all of a sudden you have something, right? And that is not a good way of going about, I think. It's much better to be able to pay yourself, just like we want our kids to do in regular stores, right?
Sounds, yeah, go ahead.
Nope.
All right. So this sounds almost like scary and promising at the same time. I mean, I've personally been playing since from a very young age, and what I learned is basically to be very cynical of people when being exposed to these monetary systems in these virtual worlds, and in a way it can help. So it's an interesting phenomenon to follow, of course. Now, before we start rounding off the conversation, there's one more topic that I think we need to address, and it was already briefly mentioned in one of your comments earlier, and that's the new notion of central bank digital currencies. Now, central banks, as we know, have realized that cash, the physical cash, is going away, and now they're looking into digital currencies as almost like a complement to the physical cash that they issue. So central banks think that the central bank digital currency is a way to address this cashless, the phenomenons coming out of the cashless trends, and partially also the problems coming out of cashlessness. But what's your opinion of CBDCs? Earlier you mentioned that you actually think that it might not be the answer of into the future, or can you reflect on that?
No, but I I think I'm not an expert in that space, but I do believe that there needs to be. I mean, if there's not such thing, everything is privatized, right? And that doesn't seem like a great idea when it comes to money, to me at least. You know, from sort of an inclusion perspective, not every person in the world have traditional banking services, for example, and also in times of trouble, I think it's good if there is an institution like a central bank that can sort of back up whatever we have decided value looks like, you know. So it makes sense, but it's very abstract. I think if you would ask somebody on the street, I don't think they even understand the difference between. I hardly do, between private and publicly made money, for example. That money is made and stuff like that. So it's so much easier to sort of see the money. And we've of course been thinking about this a lot. Could we collaborate with any of those players and visualize the money, you know, because that would maybe make sense, not only for kids but also for people that have different sort of functional variations, or you know, groups in society that doesn't feel comfortable handling this abstract notion of a traditional digital bank. So I don't know if I have a good answer to it, but I do. My gut feeling tells me that there should definitely be something like that. Otherwise, things just feel too rocky somehow, you know.
Yeah, but I mean, you actually touched on a very interesting point when it comes to the design of the central bank digital currencies, because one of the key questions really is that how is this really different? Because if you look at the way that central banks are now designing these digital currencies, ultimately it will be just another row on your mobile banking application as another balance on your mobile banking application, or it might be a separate application, but nonetheless, it is a number on your screen. Just like your current bank balance, so current card balance. So how do you actually differentiate that? Is there a way to make it more tangible, to make it different from the current private versions of money? So you might be onto something there. Maybe there is a way to kind of create this centrally or publicly issued digital currency in a different way. So I would definitely keep your eyes on that.
Yeah. I mean, if you look at, again, if you learn from the gaming space, for example, you know, when you run around in Mario, you're picking golden coins for a reason. You know, you're not picking numbers, and you know, I think there is a very big reason to believe that our psychology requires different ways of I don't know, seeing money or seeing things, you know, perceiving things. You perceive value when you look at something. And so visualizing money in different ways, I think, is an interesting thing, regardless whether it's Tjing or not, right? But that sort of number is very abstract. It's very hard to feel anything when it moves a little bit, you know, even though it might move quite a lot in some sort of context. You lose, I mean, with money, with numbers, you really lose. You relativize really quickly. If there is another zero added, for example, it doesn't look like much, right? Then you start to think in hundreds instead of tens, for example, or in thousands, and all of a sudden the hundreds don't feel like anything anymore because they're like, you know, not ticking any emotional boxes. There might be a game to play there for sure.
So yeah, tangible digital money. That's the future. You heard it for the first time here on Fintech Daydreaming.
There we go.
So as we round off the discussion, and I know that our audience has been thinking about, well, where is the joke? You didn't do the joke in the beginning. So dear audience, don't worry. We always do the joke in Fintech Daydreaming. And this time I've heard that, Paul, you might have a joke for the audience today.
As always, yes, I've got a horrendously bad joke, and I think it's quite relevant to the discussions we've been having around about money and financial literacy, financial advice, and everything else. But Ville, you've heard that old phrase, right? Money talks.
Yep.
Yeah. Well, my question is, if money talks, why do we need financial advisors?
Yeah, that's a good question. Also,
I promised bad and I delivered bad.
Yeah, you know, almost kind of felt like, you know, is there another line coming to this joke, or is this really
no?
Bad? Yeah, it was. Yeah,
that's it. You know, what's funny is that we can actually make money talk in Tjing, and if we give you financial advice, don't spend me. That's no I'm serious when I say that. We could make money.
I like it. I like it.
So that's like generative AI on money, programmable
Exactly.
money. I mean, now we're getting into really kind of big hype topics here. So
I know.
better
Money
actually
with money with emotions. Imagine that.
Oh, emotional money. Oh, yeah.
Emotional money. Yeah.
Great. But we do have to round off the conversation today. Unfortunately, we could go on forever as always. But Marcus, before we sign off, was there anything you wanted to mention that we haven't had a chance to talk about today?
No, I think this has been a super interesting conversation. Thank you very much for having me on the podcast and for putting a sort of spotlight on the subject. I think we've covered most of it. Inclusivity and financial literacy, super important for the future generations, and we have to take that seriously, I think.
And we couldn't agree more. Final question: how can people reach out to you, find out more about Tjing?
They can email me at marcus@tjing.com. That's probably the simplest way of doing it. Or add me on LinkedIn, for example, Marcus Ivarsson. That's probably the two most favorable options. I can provide info to you guys, and you can put that in if you have a.
We will put them on the show notes. Great. Yeah. So thank you, Marcus, for being a fantastic guest. I think the conversation will be very interesting for many of our listeners to hear. But what's also interesting for our listeners, of course, is our new collaboration with the Fintech Farm. So Paul, maybe remind the audience once more about our new collaboration.
Yes, absolutely. As we said right at the beginning, Fintech Daydreaming has officially created a partnership with Fintech Farm in Helsinki. We are going to be collaborating with them going forwards. We will be their partner of choice at their conferences and events, as we have done in the past, but now a little bit more structured going forwards. But most importantly, we will be doing a joint monthly episode of the Fintech Daydreaming podcast, focused on their monthly newsletter called Nordic Fintech Insights. And our next episode of Fintech Daydreaming will be our initial kickoff with them. Looking forward to that.
Indeed. And as always, remember to subscribe, like, review, leave a comment, send us a note, do all the usual things. All of that is very helpful. And with that, I would like to thank you, dear listener, for listening in. Marcus being a fantastic guest, and of course, Paul, my dear co-host. With that being said, this has been Fintech Daydreaming.
This is Fintech Daydreaming.